I'm excited today because we're going to be talking about newsletters like we think of them. I've got Matt McGarry here, who is, you were what, third employee at the Hustle?
A little bit later. I came on Hustle about 2020, so maybe
Okay.
we had a team of 20 at that time.
Okay. So you came on at the Hustle. So we're going to be talking about the newsletter boom that's happened outside of FinPub, and how that has, how's it grown, how it's gone from the world of the morning brews to influencers now using, and other entrepreneurs kind of launching their own newsletters. And Matt's kind of at the center of this these days. He's got a newsletter and podcast for that world about how to kind of build a newsletter subscriber base. He's got an agency helping people who get to a certain size actually go out and acquire. He managed all the acquisition, I think, and learned customer acquisition or e-letter acquisition for the Hustle. So Matt, thanks for being here.
Thanks for having me.
So for people who maybe aren't as familiar with like that newsletter world, how would you describe kind of the newsletter boom from the direction that you are coming to it from, and the newsletter businesses that are out there versus kind of what we have here in the financial publishing world?
Yeah, there's a lot of similarities, but usually a little bit of a different business model. It's not direct to consumer, not selling their own products usually. So this we call these newsletter first media companies usually. And so the most popular one everybody knows of is Morning Brew, which is like north of 100 million in revenue and had a big acquisition or had a big sale in 2020. I worked at The Hustle, which is a newsletter that started around the same time. We sold to HubSpot for about 27 million in 2020. And then there's other ones like The Skim, which has like north of 10 million subscribers. It's focused on a female audience. And there's other ones like well before that, like the Daily Candy. They kind of pioneered the model. But of course, after the success of Morning Brew, The Hustle, The Skim, many others have popped up too. Like the MilkRoad, which is another one that I worked at. So that's kind of some of the players, but the business model just works a little bit differently. Usually these are daily editorial newsletters, and usually there's brand or direct response ads within them that they're selling to third-party advertisers.
Okay, so the newsletter itself is, they're generally not faced by a personality, right? They're like the morning
Yes.
brew. So there's not a personality. They have a topic strategy, or that is usually like Morning Brew is a little bit like just a general news site, but some of the other ones were more like kind of niche specific, right? In terms of like they'd have a more defined audience.
It started broad. The Skim was kind of business news and personal development news for women. Morning Brew is business news for young professionals. The Hustle focused more on like tech and startup news, a little bit more of like a Silicon Valley angle, an Austin angle than
Mhm.
Morning Brew, which is more like a New York perspective. So those started broad, but now we're seeing a lot more success with the niches like MilkRoad, which is all about crypto. Lots of AI newsletters have popped up and grown to 500,000 or a million subscribers really quickly, just focusing on how to use AI in your professional career, stuff like that, and many other niches.
So, I mean, those are big numbers in terms of subscriber bases, right? Like when you're talking about acquiring names in that model, could you kind of walk through, just so everyone understands here, the acquisition kind of math, how that works? And then how, I mean, are these funded businesses? Are they generally raising VC in order to be able to cash flow that acquisition in the beginning? Because if without a product, like it's kind of the chicken before the egg problem of, you need an audience to sell to advertisers, and you need advertisers to fund the model. So how's that working?
Yeah, so the big three we talked about in the beginning, Morning Brew, et cetera, those raised a small amount of money. I think they all raised approximately $1 million back in 2015, 2016. But the ones that have kind of popped up since 2020 and onward, it's much less common to raise money. Bootstrapping has really become more popular and also really the best path for this type of business model. And it is bootstrappable. A lot of these audiences can be built and have been built organically first through social media growth on Twitter, LinkedIn, whatever it might be, converting that social following to a newsletter subscriber, building that up to a decent size, like a list of 10,000, 50,000, even more, and then using that revenue from sponsorships to invest back into paid growth to scale to hundreds of thousands of subscribers or more. So there's a mix of both, and there's also a lot who have just raised a small amount of money but wouldn't call themselves venture
Right.
backed.
Okay, that's not like wildly different than our space, because I mean, like the I use the Morning Brew. I think everyone uses the Morning Brew as kind of like the, oh, this is what the space is on that side. We use the Motley Fool because everyone knows that brand, and the Motley Fool is, I think, one of the biggest advertisers in the Morning Brew. But they also raised, I think they raised 100 million back in the '90s originally, whereas almost everyone else was bootstrapped. So it's a very similar kind of sounding growth in the industry. Then, what? How do I get when you're advertising? Well, let me step back. The social piece versus the paid acquisition piece. When you say that they're starting with like social audiences first, what does that look like? I mean, did the hustle start that way? I mean, did MilkRoad, you said, start that way? Like, how are they
Yeah, I can
building
give
out
a few examples.
a large social audience first? They're grinding that out and then converting that into a newsletter model.
Yeah, everybody's a little bit different. And so back when the hustle was getting started, social wasn't as big, so they wrote a lot of viral blog posts. They got shared a lot. They got subscribers that way. The Morning Brew really had like a student, like college student referral program and ambassador program where they got their first 100K that way or close to that. Um, but now it's more about like a big catalyst for the growth of a lot of these newsletters was Twitter threads from 2020 to 2023. There's just massive reach on Twitter through threads. And so people like Sahil Bloom, he now has a newsletter of north of 600,000 people. He's kind of, I would call him a content creator, but he got his first 100,000 or more just through Twitter threads. Cody Sanchez is another one who I've worked with. She's a newsletter north of 600,000 people now too. A lot of growth through Twitter and also through other platforms now. She's become big on YouTube. So they kind of followed the content creator route, but instead of being a YouTuber or like a TikToker, usually it's more education-based content, and the platforms they're posting on usually start with Twitter and LinkedIn, then expand from there. But it's a mix, right? So the MilkRoad, I was the first employee there, and we started with paid ads from day one, and we spent a lot on Facebook ads and TikTok and Twitter ads, and we acquired a lot of subscribers very quickly there. And social growth was kind of a secondary thing. So there's different ways to do it. The AI newsletters that I mentioned before that have all popped up very quickly, and there's like three or four now, north of 500 or 600,000
Mm.
subscribers. They did a combination of both. They blew up on Twitter. Everybody wanted to hear about what was going on in AI, and they also ran paid ads.
Right, right. So okay, and when you do the paid ads, like, what's the math gonna look like on that? Like, how are they figuring out their math on that? Because obviously the subscription, we're looking at ROI based on initial sale and follow-on sales. Um, Obviously this is sponsorship revenue. So how do you figure out things like what you can pay for a lead and a reader?
Yeah, it's unique to the space. So it works something like this. And these are going to be a little bit rough numbers. So usually, so we do this for clients. Our average CPA cost per email subscriber for a client is $2, but it can vary so much depending on the niche of the newsletter and the audience. We have some clients and newsletters that we know that have hit $1 CPAs consistently at scale, and then some who are more comfortable with like $3 or $4 because they have a higher LTV for that subscriber. But let's just say we use $2 on average. So you're going out on Meta. Meta's the best platform, but Twitter and TikTok have been secondary platforms for a lot of these folks. So paying $2 per subscriber, a lot of people are using a tool like Sparkloop Upscribe or Beehive Boost to have co-registration in their sign-up process. And so they'll earn a small amount of money during the sign-up process. They might earn 50 cents all the way up to $1.50 per subscriber in earnings from that co-registration from Sparkloop or Beehive. Sparkloop's the most popular. And so that lowers the cost on day one to like a net acquisition cost of 50 cents or $1 per subscriber. Sometimes more, sometimes less, but these are just general numbers. And then over a period of 3 to 6 months, they'll make that revenue back and hopefully more through the sponsorships that they're selling. Usually, like a payback period, a really good payback period for this would be like 3 months, but 6 months and longer is more common for the more established newsletters, like a Morning Brew or the Hustle. When we worked at the Hustle, or excuse me, when I worked at the Hustle, we used a lot of meta ads, and through the lifetime of that business, they acquired well over 1 million subscribers just through meta ads, meaning Facebook ads, just that platform
Mm.
alone. And if we look at I've been lucky to talk to a lot of people, these bigger newsletters, 1440, Morning Brew, The Hustle. Meta is always their number one acquisition channel for their entire email audience.
Okay. Okay. It's such an interesting thing to me because I think like there's so many parallels, but one of the things that I've been talking to to all you guys in FinPub about is kind of the mainstreaming of financial publishing, and that like the retail investor is becoming much more prevalent, and there's more people, and there's more like there's this boom in content creation. But what's fascinating to me about like the the hustle, the MilkRoads, and the morning brews is that it's taking the newsletter content model, and that in and of itself is also kind of mainstreaming, and that's becoming very well known across all kinds of sectors. um, the types of advertisers that you guys are getting are different than people who are in our space. I mean, Motley Fool may be over there, but there's a wide variety of advertisers, right? Like um
There is, and there's still within a couple main industries. So like financial publishing is big. So the Motley Fool is like a top three advertiser in Morning Brew, probably in the Hustle too,
mhm,
and other newsletters that they kind of incubated and funded a newsletter called the Daily Upside, which now has north of 1 million
mhm,
subscribers, and they're probably still a huge sponsor there. I don't know if the other Agora companies are like market wise sponsor these newsletters much. I haven't seen that as much, but um, some other financial publishers can be big. Obviously, financial tools like brokers or apps like a Robinhood,
mhm,
those are huge sponsors of this. Robinhood recently acquired a newsletter called Charter, which had about 400,000 subscribers, also in like the business and finance news category. And then a lot of big ones are like what I would call like personal or consumer software. It's like personal finance software, Credit Karma,
mhm.
productivity software, anything that's like personal SaaS is huge. Um, and
B2C
it's
SaaS basically. I
yeah,
mean, like, yeah.
D2C SaaS. Not as many D2C brands selling a physical product or merchandise or
Mhm.
athletic greens. That's more in like the podcast space. But like the financial products and the consumer SaaS products are really popular. And that's just for prosumer or B2 C newsletters. When you get into B2B newsletters and B2B media, of course, there's a whole bunch of B2B advertisers that play in those niches.
Right. Yeah, B2B is a different animal in a lot of ways, but there's a similar model. Like there's a very large B2B newsletter world at this point.
Yeah, it might even be a lot more interesting and lucrative than the B2C and the prosumer, which is the ones we've been talking about so far.
Yeah. Yeah, that's I think B2B is, um in FinPub we're all B2C, but I definitely think that the B2B space is one of the most interesting spaces out there in digital marketing and in the newsletter stuff. And just from some of our offline conversations, some of the things you showed me on that side, I think we're really, really interesting. Much bigger companies there because B2B is different price points. And if you have a large B2B audience, you have a much more substantial business, right?
Yeah, if you look at Industry Dive sold for 525 million, I think in 2020 or 2021. That's one of the biggest acquisitions in media ever.
Mm-hmm.
And they're a B2B publishing company with about 30 brands, and newsletters and emails are a big focus for them. It's basically web and email are where their audience is. And of course, Axios, a lot of people wouldn't consider them B2B, but they really are.
Yeah.
They had a huge acquisition. It's around the similar numbers. I don't remember the number off the top of my head.
Yeah.
Um,
And that,
yeah,
that industry dive, I mean, you said 500 million, that's like 200 million more than Investors Business Daily sold, right? And they had an enormous, I mean, they were getting, I think 20 million uniques a month in traffic. And I don't know what their list sizes were, but like, so it's a very substantial business there. And speaking of acquisitions, um, do you have any idea what the multiples are in this space in terms of exits lately?
there's I'm not an expert on this, and there's been a big variety too, and there's also not total transparency, as you
Mm.
know, with all these, right? So I think you can go. I don't know the numbers off the top of my head, but you can go back and kind of figure out what they were for the Hustle, Morning Brew at Industry Dive, um, and
What's the
now they're a
hustle's
little bit
revenue?
lower.
The hustle, I mean, if you can say it, like, do you know roughly where the revenue fell on that?
I'm forgetting now because it's been so long, but is eight figures in revenue. They actually had a low multiple, in my opinion. I think it could have been a lot bigger acquisition. I think it was the founder was kind of in a position where he wanted to get out of the business. He was ready for the next thing.
Yeah.
Morning Brew had a better multiple than the Hustle. And the Hustle had, a lot of things that Morning Brew didn't have. They had recurring revenue through a subscription. So,
What did
um,
the morning brew sell for? I forget. Was it 70?
75, I think. I think it was 75. And now, a couple years later, they're doing they've said they've done more than 100 million revenue, annual revenue.
Wow.
Um, and of course, like there have been economic challenges, especially that started in 2023, that have made these multiples go lower. And some people, like I think Morning Brew, has slowed in growth because the whole
Yeah.
advertising economy is slow too. So there's those changes as well.
Yeah, we're very familiar with the 2023 slowdown as an industry. It definitely hit here. I'd say second half of 2022 and first half of 23 were some of the hardest in the industry in the 10 years. Um, but how do you, so you're also like you're out there kind of teaching people how to build newsletters um, in this model who are kind of completely unfamiliar with this. How's that space looking to you? How do you see like the um, a lot of interest and a lot of growth happening in terms of people looking at, like, we saw Substack obviously as a platform providing, and then Beehive coming in and making it really easy for somebody to do the kind of technical stuff to get a newsletter going, and that's really fueled the boom. Do you see there's a lot of excitement and a lot of interest on in building both free and paid newsletters?
Yeah, there's a lot more. I think it really started in 2023. Well, it first started in 2020 with Substack, and some of those acquisitions kind of triggered it. Substack and Beehive have made it a lot easier. ConvertKit is great too. All really those three platforms have driven this wave. And along with the acquisitions and people seeing success out there, and then finally people like me and Sampar and other people actually talking about how these
Mm-hmm.
things work, and you, and many others too. Those are just a couple examples, but that has helped. Yeah, it's just I've done email marketing newsletters for a long time, and it's way easier now to spin something up and to start publishing. And I think people are starting to also see the value of the email audience. I mean, your audience, and you know this, and you've known this forever. Like building an email list is so important, and it's an audience that you own. But that simple concept has become more widely known and popular in the past year or so with a lot of other people. So that's kind of the wave I've ridden a little bit, and I've been a promoter of, right? So I've like a small newsletter and podcast that promotes that. The audience size isn't huge there. We have about like 16,000 newsletter subscribers and thousands of podcast downloads per episode. But on the back of that, I've been able to build a service business, an agency that's been more
Mm-hmm.
successful and a big, positive impact on my life for sure.
Yeah, no, that's great. No, I think that's like, we're over here in very small kind of, it's a big revenue niche but a small number of companies, and so we have kind of an insular view. And it's interesting to me because on almost every other marketing strategy, um, I would say that FinPub tends to lag like internet marketing world and digital marketing world because um, for a bunch of reasons. Um, and it's not a bad thing. We tend to focus on like fundamentals, and then things, you know, we were buying media maybe more aggressively than everyone else for a longer period of time. But it's funny that the newsletter boom is really taking off in 2023 from our perspective now, just because, I mean, when we think of newsletters, we're thinking like, you might argue, did this start in the 40s or the 50s with off, because it was offline, it was an offline business, in direct mail, and like um been doing e-letters. This is the one thing that you could say, I think Igor probably started, was the e-letter back in the early 2000s, because it was like, hey, we just take the print newsletters and put them online, and now you can turn them into an acquisition source. And so it's interesting to me just because we've been doing this forever, but now to see such an amount of excitement and energy happening in other spaces with the model at a time when like finance is also kind of mainstreaming, it creates a really interesting set of opportunities. Because one of the things that we've had as a industry is that when you go to talk to other people, like, they don't understand what we do, right? They don't understand newsletters, um, and like the subscription side. And so now it's much more like, it's a transformation that's happened in my view, that people can actually see, um, you say, oh, we have a newsletter business, and they have, at least if they don't have the same model in mind, they have a concept of what it is in a way that they didn't before. And it doesn't seem like a big deal, but when you're having business conversations, it actually is kind of a big deal, because now it's like there's less education that has to happen. It's more about like, well, our model's different. Well, how's it different? Oh, it's subscription, you know. And so I do think there's probably going to be a lot of um, cross pollination. Um,
Yeah, and I
one of
think
the
there should have been already. And I'm kind of because I kind of first I'm not an expert on FinPub, but like I kind of first started researching it back in 2017. Um, was fascinated by this business model and the Morning Brew type business models at the same time. I kind of got into um, exploring both those worlds at the same time, and there hasn't been as much overlap outside of kind of buying ads um,
yeah,
than I would expect. I think one of the failures of newsletters like Morning Brew, the Hustle started doing this before they got acquired, but they never really developed their own products to sell, and they never really had much revenue from selling their own products, going direct to their subscribers and selling something. A
mhm.
lot of people at Morning Brew thought they should basically start, their version of the Motley Fool, and I think that would have been a huge success, but it never got off the ground because you kind of build a business around one model, and it's really hard to transition and add different revenue streams after you're already big.
Yeah,
Uh,
and it's like there's like limitations of our model that are also strengths, right? Like in order to make our models work, you need much more aggressive promotional copy. And one of the largest, I would say, um, limiting factors is the amount of capable copywriters who can write that copy, because it makes a massive difference, and we can't even get enough from them. And so it's one of those things where like the Motley Fool has a less aggressive approach to copy because they also have a media business too. Um, but the rest of the industry has like, I mean, you look at these promos and they're, if you print them out, it's 50 pages long, 60 pages long.
yeah, and that's something Morning Brew is never going to be able to do. But because they have this massive audience and they built up a lot of trust of that audience, they don't need to do it in quite the same way.
True.
They can get away with something more like what the Motley Fool does, and they'll have their
Mm-hmm.
unique spin on it.
Yeah.
In the hustle, we tried this a little bit. Like we had a product called Trends, which was more kind of in the business opportunity space, and we had not a great conversion rate, but like over like a 2 year period, we had 15,000 plus members at $300 a year.
Nice.
And that was growing really rapidly before it got acquired, and then it got shut down by HubSpot, which is a big disappointment. But so it's definitely possible.
Yeah, no, that's very cool. So like adding yeah, that's interesting. So I think of this as like um the media business, right? The niche media business is becoming more and more varied, and we see a lot of that out there, um, from video and written newsletters. Like, I worked at Real Vision for a while, which had some good hope, and then it kind of fell apart in a lot of ways. You've got really cool businesses like The Information out there, um, that are mixing, right? Like they're mixing strategies, right? So you have a core subscription for the basically the news site, the niche news site, and then they'll add um, events, other products, and things like that. And I've seen that where like we're seeing this mix of um, product lines across a niche media business, and that works when you have a niche audience. Do you see any of that kind of stuff happening too? Do you see like groups adding events and things like that to their media mix?
Yeah, I think niche is really the future of newsletters and really media in general. And it just unlocks these additional revenue streams. Where like you can't really do a broad event. Um, it's tough. The Hustle had one, but it was more the newsletters were more general, and the event was focused on founders and entrepreneurs, so it wasn't a
Mm-hmm.
broad event.
Yeah.
But yeah, I think it makes sense to not that diversification is always good, because if you have one business model that's just absolutely crushing it, you don't need to diversify. But you know, advertising is not perfect, and so the ones that I'm seeing are that are succeeding is where they have sponsorship in the newsletter, maybe other sponsorship products. They might have a subscription or an information product that's a one-off offer. They'll have an annual event, maybe more events. And that's just the start. Those are like three. And I think the
Mm-hmm.
ones that are struggling, the media companies that are struggling right now, whether they're newsletters or not, are the ones that just have one revenue stream, which is usually advertising. That's the one
Right.
where most people are struggling. The only place where I see kind of one revenue category working well is like B2B sponsorships, because there's so many different types of ad products you can sell. You can sell sponsorship in the newsletter, podcast, you can sell sponsored webinars, sponsored
Mm-hmm.
podcast interviews,
Yeah, branded
um,
content, all kinds of stuff for
yeah,
the
branded
B2B.
content, deep dives, advertorials. So that's like it's really more than one revenue stream, but it's one category. And so that works great for B2B. That's never going to be a B2C thing. But that's kind of one example that's a little bit different than what we're talking about.
Yeah, yeah. But I think, I mean, B2B, like, I mean, audience selection determines your price points in a lot of ways, or the price ranges. And so that's one of the nice things about the B2B newsletters is that the price points are fundamentally higher. And so, because you're dealing with a business trying to generate business, and so they can spend more money, and that makes it a very attractive space. Um, and so, what kind of groups are you working with now as an agency to help grow their newsletters?
We're working with a couple. I can name off a few just to give some good examples. So Charter, the one that got acquired by Red Robin Hood, we've worked with for a long time. We work with a lot of newsletter focused creators like Sahil Bloom, I mentioned, Cody Sanchez. They've opened a client. James Clear, the author, is a client. He's growing his newsletter to over 3 million subscribers. And he's sold, like last year, his book was the best selling book out of all the books on Amazon. And a lot of that is through email. Like he wouldn't have been able to do that without his 2 million subscribers, then 3 million now.
Right.
So that's kind of some examples of the creator space.
Mm-hmm.
And then we work with a lot in B2B. Like we started working with Workweek recently, a couple other B2B in different niches, healthcare, entrepreneurship, fitness, tons of different categories in B2B. That's probably one of our best types of clients we can work with.
Mm-hmm.
And all of those are kind of newsletter first media companies or creators. And we've started to dabble in helping a little bit more people in like FinPub. Um, so really just one or two um, financial gurus or publications right now that
Yeah.
are clients.
Nice.
So it runs the gambit, but that's a little bit of what it looks like.
Okay. And the like, it's interesting. So like the influencers adding in authors and people like it, we've known this for a while, and it's cool to see um, other spaces looking at like, well, if I have a paid subscription product that changes the math of everything that I'm doing with my media, and it becomes a really valuable distribution source, and so to see it kind of explode outside of finance, even though it is very like finance adjacent in a lot of these cases, um, I don't know. I think it has a lot of for me. I'm like, this is just another like thing put in the back of my head is this trend is happening. It's changing the way people relate to their media. It gives it changes the economics of your acquisition for sure because you can acquire differently or spend more on acquisition. But still, I'm still shocked at how big these publishers are growing with just the sponsored model before that. Um, but you have groups like, sorry, I'm rambling a little bit here, but it's more I'm thinking this through as we talk because um, how are you like? What are some of the parallels and differences? Like, what are the most striking things that you see between like kind of what we're doing over here and what's happening over there, and where do you see like whether it's opportunities or things that maybe we're not thinking about as a publishing business that's pure subscription? Um,
Yeah,
yeah.
I think, and I'm still learning here. So I'm definitely a beginner when it comes to FinPub. And that's why I'm trying to learn more from you. And I've kind of devoured the resources out there, but honestly, there's not much outside of going and talking to people. And I got to go to more events. Due to that, go to your event. So I'm working on that too. So I think, and again, this is not a totally informed opinion. So I'll just say my opinion.
Hmm.
I think there's a lot of reliance on, almost total reliance on paid acquisition sometimes. And there's not maybe an organic growth channel. What do you think would you say it's accurate
I'd
for
say
a lot?
that's 100% accurate. And actually, I
Yeah.
was talking with one of the CROs at one of the MarketWise groups the other day. We were having coffee, and he was saying that what he would really love is to start to understand how um, social growth, building a social audience looks, and then converting that to a paid newsletter. Um, because it isn't an area that has traditionally been something that we've been good at or really put a lot of effort into. And the people who have put a lot of effort into it didn't really seem to get it right because they're, again, taking an existing model and trying to shoehorn it in to, so even our whole messaging model, the editorial teams, everything is designed for a very specific type of business, and it's not necessarily designed from social first.
Yeah. But it can be a great top of funnel for these businesses, I think. And you got to look to the creators to really learn here. So the creators that I mentioned on this call, there's many more. There's like Zane Khan is a big one. there's so many examples you can point to, um, whether it's like finance creators or various different categories. Um, I just haven't seen the same type of focused effort on social from financial publications. And one of the challenges is like literally every 1 to 3 years, social growth is going to change dramatically. Like we talked about Twitter threads being huge 2020 to 2023. The reach on Twitter has been shot recently, with the algorithm changes there. So that may not be a great platform for these publishers. What is popular now is like short form video.
Mm,
So TikTok, Reels, Shorts, etc. That is the place to be, and that's where you're going to get the most reach, for the effort that you put in. And those have challenges too because you have to be on video. And I don't know if the gurus or creators or like people at those brands can do that. Um, but it would be worth doing if they want to have an organic growth channel. And I think
mm,
if they're able to drive these social, followers and views to a free newsletter, and then that free newsletter can convert them to paid, which is one thing FinPubs are great at is like conversion, essentially, right?
yeah.
Um, but I feel like they don't have a lot of them are missing that top of funnels. So that's easier said than done, but that's just one of the many tactics they could do.
Mm,
Um, and this is another thing that's like more up to debate is like I don't see as many really good editorial newsletters from the industry. I don't see, not that I think Morning Brew is the best content in the world, um, but there's just it's a lot of it's more like 80% sales, 20% editorial, whereas some of these other newsletters might be 90% editorial, value add content, and then 10% sales. Or they segment the list a lot more and only send aggressive sales promotions to subscribers who are really engaged.
mm.
Um, it might be a different culture, or it might be just the aggressive strategy works way
I think
better.
that I
It's
think
up for
there's
debate.
well, I think it's a mix of things in that there is actually like a pretty robust. So I mean, everyone's sending out daily newsletters of content, and if you have a large publishing business, you might be sending out 20 different newsletters from a content standpoint, and then there's different ones for the free. There's exclusive newsletters for the paid ones, and then you have 30 products. All those people are getting a newsletter just because they're customers, maybe. So there's a ton of content too that's behind the the paywalls. And the free side, the other part of that is that there has been a proliferation of, I'd say, sweeps, email sweeps across newsletters. And so you opt into one place. And one of the media buyers in the space was telling me this the other month. He's like, yeah, I opted in over this one place and with a new email address just to see how many different emails. And he's like, within 2 days, I had 100. Um, so there's this explosion of kind of aggressive marketing that's happened, which is kind of I don't know, it's like the snake eating its tail because now the attention is getting splintered even more, which means you got to hit them even more often to get that attention. And so it's like, it can be a slippery slope. And it's something that I think as an industry that we are um, struggling with across the board. Right.
Yeah, I feel like what these newsletters, the media first, newsletter first media companies have been great is that they're great at building habit products. There's literally millions of people who open and read Morning Brew every single day,
Mhm.
and they love that brand. They consider it part of their routine. Same thing with the hustle. It's even before HubSpot, I think that the content was a lot better. It's hard to continue at a big corporation, but there's many other newsletters that really have built a strong habit and an amazing brand affinity. Um, they never had a product to sell, so I don't know if it would have
Right.
worked or
Right.
not if they did that. But I think there's some value in doing something like that. If
That's
these
very
companies
interesting.
can build just like one brand that has great editorial, it doesn't have to be long editorial content, but short editorial content every weekday. Um, there's something there, right? It's hard to get into exact prescriptions on what people should do, but that's worked well for all these newsletters, and every single one of them talks consistently about building habits with their readers. And I don't, that other publications may not have that same philosophy.
Yeah, I've never actually thought about that. It's not a conceptual model that we use in FinPub, but it's an interesting one, right? That the idea of that you're trying to build a habit, because it is like there's very like digestible short form content. You can kind of scroll through. You're not making a big commitment to a story. Um, we have There's definitely room to explore that. I think more. So anyone who's listening who's tried it, I'd love to hear from them.
Yeah, and I think it's not rocket science. If you go read Axios, read Morning Brew, read The Hustle, there's a couple other really good ones. You can see what this looks like. Um, and I think there's a way to marry the two models in
Mhm.
some way.
Yeah, that's interesting. Axios has that kind of bullet centric like um, content model, which is really interesting because it's just real fast, consume like almost like little headlines and pieces of information you need to know, and they'll have a story and they'll just hit like five, six, seven bullets on that story.
Yeah, they call it smart brevity, and I wish they would kind of share more about their philosophy and framework behind how they do that. But it's really good, and it's so simple, but they've built a surprisingly huge media company around smart brevity. I mean, there's more than just the content, right? They've been able to sell these like corporate advocacy and like lobbying ads to large Fortune 1000 companies, and that's
Mm-hmm.
kind of their business model. But through the smart brevity content, they've built an audience of like policymakers and executives and CEOs that's one of the biggest in the
Mm-hmm.
world, excuse me. So there's something there, right? And I think Axios now has a bunch of different newsletters. They have local newsletters and stuff like that too. But there's a lot other publishers can learn from that. And I think one thing a lot of people miss is just that your relationship in someone's inbox is so intimate. And it's very easy to ruin that relationship very quickly
Mm-hmm.
with even like mediocre content. So I think the bar of content in the inbox is really high. And if you, I imagine if you were to look at some of the open rates between like a newsletter first media company and some who are more focused on marketing, they're going to be drastically different. There's a company called 1440, which has 3.5 million subscribers now. They're eight figures, very profitable. And they're consistently at that number of subscribers, they're consistently hitting 55, 60% open rates every single day,
Wow.
5 to 6 days a week. And that's
Wow.
because it's all content focused. And the only ads you're getting are small native ads within the newsletter. They could monetize that audience more if other ways, right? But that's just what they're able to do with that type of content.
Yeah, no, that's very interesting. I mean, some of the larger companies in this space in particular are probably more interested in this in the sense that they need to like they they spend so much external media so they can build something themselves that kind of functions that way and keeps that attention, then it becomes a very useful thing. And I think that um it's an interesting kind of axis of attention when you talk about these two models, right? Because you're talking about getting a very large list of people who have kind of habitual opening what is essentially like the nature of the relationship is very interesting, right? I'm focused on kind of consuming my news this morning in this way. It's part of my routine. And then on the other axis, we have like we're trying to go deep engagement with a personality because people are buying from a person, and so you want to get like this guy's view on this trend. So it's not just like, hey, AI investing is a thing, but I want to know like what does Porter have to say about this
Is it
specifically?
always personality driven in these publications? Because I don't follow this as deeply as
Yes,
you.
yes. By
Is
and
it like
large, there
100% of the time?
I'd say
Um,
80% of the time, 90% of the times. On the trader education side, there's a little bit different, but like it's very, very personality driven. Because you're trying to build a relationship because it's not about getting the, 50 to a $300 price point, right? It's you have that product and then you're going to have three to five 2000 $3,000 price points. You're going to have in the larger groups like you might have a $20,000 $30,000 private group, and so the personality that they are engaging with is a huge part of it because it's that person's worldview, right? It's their worldview, their perspective on things. It's not just their track record, right? Track record is not like, oh, hey, you were a successful investor. It's you were a successful investor in a way of looking at the world that I understand and I appreciate and want to be a part of. And so having that, like, there are on the trading side, you'll see more groups that have a little bit less personality forward kind of content. But newsletters traditionally have been fringe content, fringe ideas, niche ideas, not as much niche audience, niche ideas, like things that you can't get from the Wall Street Journal, things that you can't get from your broker. Um, And because of that, they're fringe. So wait, why should I listen to you? That part is a huge part of it.
In that personality model totally makes sense for what you're doing there. Um, and also the model of marketing more makes sense because the way these media companies make money is by having the best subscriber retention and getting someone to open a newsletter 3 times a week for 3 years. And so that's very different than trying to sell someone product in the first 90 days.
Yeah.
So, I mean, I'm giving these prescriptions, but it kind of the business models explain themselves and why we're marketing the way that we do or why we're sending emails in the way that we do. And it's just a different thing. I'm sure there's some company that could balance the two, but then they would have to be less aggressive with the promotion.
Or they have a
Um,
different division. I mean, a different arm.
yeah,
I think that's actually a very interesting area of exploration is the revenue models, are great until they're not. And everyone can have uh, a bad year or two. And in those hard times, what I've noticed is the people who do have kind of multiple revenue models tend to be the most secure because, okay, like my list for like I've kind of been crushed on my subscription side right now because of the market and where everything is, but the ad revenue over here is still pretty good. Um, and then also there's a benefit to having uh, two different acquisition models that both work and can feed off each other because that's going to lower the price, the cost of both. So you have to be a certain size to be able to do that, but I think there's probably um, some interesting opportunities there for folks.
yeah, that's what I see working well. And I'm more operate finance in general is just so competitive, so I'm more operating with these kind of niche newsletters. That's what I see as um, growing really quickly, and I'm helping a lot of more entrepreneurs at the start of their journey or in the middle of their journey. But the same lessons apply to these as well.
Mm-hmm. Yeah, yeah. No, I think it's like I love the things that I've seen from you so far, um, and I think there's a lot of fundamentals in there too that people can need to be reminded of sometimes
Yeah.
as well. Uh,
I gotta ask you a couple questions.
sure.
Is I Yeah, I'd love to hear a little bit more about um like what is on the back end of these products because I think that's what so many people miss. They see the front end offer, or maybe even that they don't even see it because they don't bother to watch the whole video or read the whole sales page.
Right, right.
So they see that front end offer for $79 or $99, but that's not the money maker, right?
No, that's essentially to subsidize your media and acquisition costs while identifying a customer, right? Like that's why it's there. It's who's somebody that will put money out and how can I subsidize my media to get them? And then once you have those people, you're going to try and go to you want to use that product as that like that product becomes your retention tool. You want that to be the thing that they love and keeps them in, not so much your front end free e-letter. And then from there, you're going to have a suite of back end products that are um, there's a few different ways to break this down depending on what part of the industry you're in, right? So if you are a trader educator, right, and you're a very guru centric, like use my method, your front end products are going to be more, or your ascension ladder is going to follow a path of proximity to the guru, right? So the lower price product is like, here's some how to stuff. Next product is kind of like, here's how, here's why don't I help you do that? Like, here's my trades, things like that. And then there's high end coaching, right? So it's like kind of more intimate, personal, not directly personal, but like feeling like you're getting closer to the guru. That's one model. Another model is based on risk, right? So, all right, this is my worldview. I'm going to invest in blue chip stocks in my low end product, right? Because that's the lowest risk, the most stable way to play this. But there are also, you can use this same kind of worldview and approach to the markets and play higher risk small cap stocks that there might be higher risk, but there's also higher rewards. When it works better. When it's higher risk, or options or something like that. And so you can go based on risk. Um, and so there's a few different ways that you can kind of add that in. And so the products might look from a deliverable standpoint, the format might look very similar, but the either the frequency of the trade or the proximity of the guru or something is going to be a little bit different, right? In there.
Could you
Um,
share an example of what the second or third product in the funnel, like what a price point for that might be,
oh,
and
sure.
what
It's
the deliverables might be for something like that?
yeah. So I mean, it's going to be like, let's say if you could have a backend newsletter that is um, $1,500 to $3,000. You have an upsell for either a 2-year subscription or a lifetime subscription in the cart, usually, and then uh, the product will be some combination of trade alerts, where it's like a buy sell kind of strategy, with editorial about those trades in the markets. Um, that's one, and then on the coaching side, you might get up to like a $5,000 product that has more of a here's a set of courses or modules, training modules, and then we'll do a live webinar for the group every month with the guru. Um, and so there's some variations on that, and depending on this trading strategy, some trading strategies might be very frequent, and so they'll have much faster kind of trades and alerts. But they're all just variations on those things, right? There's a trade alert component with market analysis that will have varying amounts of frequency. And then on the trader education side, it's more in-depth training.
Yeah. So would you say very say front end is 50 to 100, the middle's 1500 to 3K? I'm sure this varies a lot. And then
Yeah, there's variability. I'd say like the front ends go down to like 49 to up to 299 that I've seen. And then in the middle there, you know, you're going to go to usually 1,000 annual is usually the lowest that but most of it's like at this point, it's probably $2,500. Um, you see that very commonly is as an annual. And then the easiest upsell is like a 2-year where you get the second year at half price or something. You get a high take rate on that in the cart as well. And then you have some groups that also sell events, or like Stansbury has their Atlas Club, which I think is $32,000, and then there's a to join, and then there's an annual um, maintenance fee after that.
and that's one of the things this industry is really good at is increasing LTV and increasing average order value. And I think a lot of people don't realize that. And so it's cool to hear you kind of walk through that. Um, do you think this, and it has been, do you think this kind of model can be duplicated things outside of investing or trading? Right. And
Yes,
have you
I
seen
do
good
think that.
examples of that?
I haven't seen a ton of examples, but you did see it. I mean, this started. I mean, in BizOp, it should have been is the easiest way, right? Like anything that's money. So the core thing about an investing audience and an entrepreneurial audience, is that you have a large enough universe to scale of people who will spend a high dollar amount, right, in the thousands of dollars. And so if you're marketing like um, to a group of people who can't spend and justify spending a few $1,000s on a product, then that model doesn't really get that attractive, right? Um, the health space is harder because of that than the newsletter space. And so even though there are health newsletters, none of them are as big or as substantial as the investing ones. So in any type of biz op environment, any type of B2B environment, this model works phenomenally well, I think.
And I see a lot of people doing it poorly in biz op and B2B and professional development. They'll have, one course that is, at a weird price, 250 or something, or $300, or it's way underpriced. There's no back end. Um, yeah. So that's when you come on our podcast later, and I just love to hear about how we can use this model or learn more about this model so other people can use it. And also it's not just the pricing ladder; it's the marketing strategy and the psychology behind it. Obviously, there's more to it.
Yeah.
But I think a lot of people are missing that. At Trends, we had this at the Hustle. We had this product called Trends, $300 a year, 15,000 members, and it really struggled because there was no back end. It was just that kind of no man's land pricing, $300 a year.
Mm-hmm.
I was kind of telling them let's like make this product a little bit less lower the price, and then have a back end for 2000. That was actually the plan. And of course, got acquired, that back end got shut down. But it would have been a lot bigger. I think it would have been one of the bigger BizOp products if that didn't
Yeah.
happen. Um,
I think BizOp, I've been saying this for years, and it's just a question of like which direction do I ever want to go in as a, but like the uh, the BizOp space is ripe for stuff here. There's a lot of stuff like when you look at offers, there's benefits to having like the subscription thing. It's just that like how you, it's not even just BizOp actually, I would say that there's actually a huge opportunity with beyond BizOp into just like I said, B2B businesses, entrepreneurs, founders. Um, there is, you just have to find the subject matters that requires information consumption and you can build multiple products with, right? Because that's kind of the thing. Investing is fundamentally information dependent. Um, and not all niches are, information dependent. And so,
yeah, but there's a lot out there that do, and that's kind of the business model I'm building. I started this agency. I have a cohort-based course now, and we brought in, we did the first course and brought in about 120K for like a
nice.
small limited cohort, and I'm hoping to do, cohorts every quarter, and then next week I'm launching kind of the coaching program, the membership, which is an upsell to that, which is going to be 5K per year.
Mhm.
So I'm learning your ways and trying to apply that, but I'm still in the very early stages.
Yeah, yeah. No, that's very cool. That's very cool. I think that there's a lot of overlap and a lot of play back and forth that is one of the things that I've thought about for the publishing space, especially some of the mid-range companies and smaller ones that do, they also take advertising. There, there's a whole other world of advertisers that could come in that are not there, that are not investor relations kind of publicos, which is a whole other area. But like there are other people who want to get in front of this audience. And I think that is one of the things that interests me the most is, hey, there's other advertisers that might be interested in the space, um, that are not currently coming into the space. And so for us, adding that other revenue stream, just another pocket of revenue to come in to help bolster, um, profits basically on existing media seems like a really good thing.
That might be the biggest low-hanging fruit for this and for some people to take away. I think if you look at, and there's some sponsor intelligent tools people can look at. There's who sponsors stuff. There's a company called openrates.co where it just shows who's sponsoring newsletters, and they focus on, about the 300 largest newsletter first media companies. And you can identify, okay, who's the top 100 sponsors in Morning Brew or The Hustle or something that's somewhat relevant to your publication. And you can start reaching out to them or developing a relationship there or something, a sponsorship to sell them. Because, like I
Well, that's
said,
a gold mine of information.
yeah,
Openrates.co, you said?
yeah, openrates.co and who sponsor stuff. They're two different ones. They're kind of competitors.
Who
I'll
sponsors stuff?
pitch
Okay.
which one is best for you. They can become kind of expensive, but if you can close, you know, six figures in sponsorships from these, it'll be worth the investment. And you
Mhm.
can do this manually, of course. But those are data products that save you time.
Yeah.
So that makes a ton of sense because if it's mostly investor relationship or investor relation ads, that's just one category in a whole big world of people who want to sponsor newsletters.
Yeah, yeah. And there's conflicts on our side with investor relations stuff, right? Like there's not everybody is thrilled with it. Um, because it goes against the ethos of a newsletter that's stock picking, right? Is we're saying that these things that we have, our analysis is really great, and these are the stocks that we want. And oh, here's an ad from a company that we would never recommend, and so it's a problem for some people to do that. Um, and so, but having that other revenue is really attractive, uh, for sure. And so, awesome. This is really cool, man. I really appreciate you coming on here and kind of talking through and sharing. Looking forward to having more conversations. And I'm probably going to be doing in June a small little event, private thing on different acquisition models specifically. And so we should talk about that separately. We're going to have one of our groups, Alta, you know, from MarketWise is going to be probably hosting and talking about their model, and we're going to bring in people from other spaces to talk about their models. So I'd love to have you there for that when we do that.
That'd be awesome. Yeah. I really appreciate you giving me an education here. And your YouTube videos have been
Hey,
super helpful. So I'll be in touch.
Awesome. Thanks, man.
All right. Thank you.
Take care. Oh, wait, before we go,
Yep.
where can people reach out to you? Where can we connect with you?
Oh, yeah. Yeah, the best way is my website newsletter, which is newsletteroperator.com. And I have very actionable stuff on the strategies and tactics that we talked about. And then I have a podcast, which is the same name. If you search Newsletter Operator on YouTube or your podcast app, you'll find that.
Yeah, and I'll put those underneath here for everybody and send it out because yeah, check it out. It's really good stuff. I've been reading it and listening. And you had Matt Paulson from MarketBeat on there. Fantastic. It's a great interview, great conversation. Um, yeah. So check it out, people.
Thank you.
Yep. Take care, guys.